the number of people using cryptocurrencies has led to an increase in legislation designed to manage them. The crypto environment is always shifting, and it may be challenging to keep up with the latest legal developments throughout the world's many jurisdictions. This guide has been compiled in order to assist you in navigating the plethora of cryptocurrency rules that exist all over the world, as well as the legislative attitudes of respective nations and the actions that are related with these restrictions. Find out how different countries regulate coins and exchanges, and whether or not those countries have any pending legislation that could impact how they think about cryptocurrency in the future. Welcome to Crypto News. Today we are going to talk about what crypto regulations can look like. Stay with us until the end of the video to learn more. Like and subscribe to this channel and hit the bell button to get notified of all the latest updates. Let's jump to the topic. The transformation of Bitcoin from a speculative investment to a new asset class has pushed governments throughout the world to investigate regulatory approaches. Below is a summary of the current regulatory situation for digital currencies in various nations. United States of America. In 2022, the United States unveiled a new framework that opened the door to further regulation. Existing market authorities such as the Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission have been granted authority under the new mandate, CFTC. With its highly publicized 2020 lawsuit against Ripple, in which it is alleged that the company generated more than $1.3 billion by selling its native cryptocurrency, XRP, in unregistered securities transactions, the SEC has already taken some steps toward regulating the industry. Recently, the SEC has started investigating cryptocurrency exchanges such as Coinbase and Binance for their crypto-related offerings. Gary Gensler, the chairman of the regulatory agency, has openly referred to cryptocurrencies as the Wild West. Nothing about the cryptocurrency markets is inconsistent with the securities legislation, Gensler stated. Regardless of the underlying technology, investor protection is just as important. In the coming years, it is possible that U.S. officials will crack down on cryptocurrencies in an effort to limit the constant influx of new coins. Whether cryptocurrencies may be considered securities will be determined by the result of the SEC's lawsuit against Ripple Labs and its efforts to regulate crypto exchanges. Illegal cryptocurrency activity is one of the problems the Biden administration seeks to address. According to the new framework, the president will evaluate whether to request that Congress amend the Bank Secrecy Act, anti-tip-off statutes, and laws against unlicensed money transmission to apply explicitly to digital asset service providers, including digital asset exchanges and non-fungible token (NFT) platforms. According to the proposal, the U.S. Treasury will conduct an illicit finance risk assessment of decentralized finance by the end of February 2023 and an evaluation of non-fungible tokens by July 2023. Officials of the Federal Reserve have emphasized systemic dangers associated with stablecoins in previous remarks. This emphasis will likely grow significance in light of the collapse of the Terra stablecoin in 2022, which lost investors $60 billion. Creating a central bank digital currency, CBDC, or a digital copy of the US dollar offers substantial benefits, according to the administration's new framework. Jerome Powell, chairman of the Federal Reserve, has stated that the primary rationale for issuing a CBDC would be to eliminate the need for alternative coinage in the country. If you had a digital US money, you wouldn't need stablecoins or cryptocurrencies, Powell stated in congressional testimony. I believe this to be one of its strongest arguments. China. For the purposes of assessing inheritances, China regards bitcoins as property. The People's Bank of China, PBOC, prohibits crypto exchanges from functioning in the nation on the grounds that they encourage unapproved public funding. In addition, China imposed a ban on Bitcoin mining in May 2021, compelling many miners to cease operations or transfer to countries with more favorable regulatory environments. In September 2021, cryptocurrencies were outlawed entirely. Nonetheless, the nation has been creating the digital yuan, ECNY. In August 2022, the nation formally launched the second phase of its central bank digital currency, CBDC, pilot test program. Canada. Although cryptocurrencies are not recognized as legal cash in Canada, the country has been more proactive than others in regulating them. Several Bitcoin exchange-traded funds, ETFs, are already trading on the Toronto Stock Exchange, after Canada became the first jurisdiction to authorize one. The Canadian Securities Administrators, CSA, and the Investment Industry Regulatory Organization of Canada, IIROC, mandate that crypto trading platforms and dealers register with provincial authorities. All cryptocurrency investment firms in Canada are classified as money service businesses, MSBs, and are required to register with the Financial Transactions and Reports Analysis Centre of Canada, FINTRAC. Canada handles cryptocurrencies similarly to other commodities in terms of taxation. United Kingdom. While there are no cryptocurrency-specific legislation in the United Kingdom, cryptocurrencies are considered property, not legal cash, and crypto exchanges are required to register with the Financial Conduct Authority, FCA. Crypto derivatives trading is also prohibited in the United Kingdom. There are cryptocurrency-specific reporting requirements for Know Your Customer, KYC, standards, anti-money laundering, AML, and combating the financing of terrorism, CFT, regulations, CFT. Although investors continue to pay capital gains tax on crypto trading income, the taxability of crypto transactions depends on the crypto activities conducted and the parties involved. As of August 30, 2022, crypto exchanges and wallet custodians must adhere to the reporting requirements imposed by the Office of Financial Sanctions Implementation, OFSI. Crypto businesses are now obligated to immediately notify OFSI if they know or have a reasonable suspicion that a person is subject to sanctions or has committed a violation of financial sanctions. Japan. The Payment Services Act recognizes cryptocurrencies as legal property, demonstrating Japan's proactive stance to crypto legislation, PSA. In the meanwhile, crypto exchanges must register with the Financial Services Agency, FSA, and comply with AML/CFT regulations. All crypto exchanges are members of the Japanese Virtual Currency Exchange Association, JVCEA, which was founded in Japan in 2020. Japan classifies Bitcoin trading profits as other income and taxes investors accordingly. The nation has been focusing on several facets of regulation, including taxation. The government said in September 2022 that it will implement remittance regulations by May 2023 to prohibit criminals from utilizing cryptocurrency exchanges to launder money. To gather consumer information, the Act on Prevention of Transfer of Criminal Proceeds will be amended. Australia. Cryptocurrencies are classified as legal property in Australia, making them liable to capital gains tax. 18 exchanges are permitted to operate in the nation so long as they register with the Australian Transaction Reports and Analysis Centre, AUSTRAC, and comply with certain AML/CTF standards. In 2019, the Australian Securities and Investments Commission, ASIC, implemented regulatory restrictions for initial coin offerings, ICOs, and prohibited exchanges from issuing privacy coins, which are cryptocurrencies that maintain anonymity by hiding the movement of money across their networks. Australia declared in 2021 its intention to build a licensing system for cryptocurrencies and perhaps introduce a central bank digital currency, CBDC. Singapore. Similar to the United Kingdom, this island nation defines cryptocurrencies as property but not as currency. According to the Payment Services Act, the Monetary Authority of Singapore, MAS, licenses and oversees exchanges, PSA. Because long-term capital gains are not taxed, Singapore has earned a reputation as a safe haven for cryptocurrencies. However, the nation taxes businesses that routinely engage in Bitcoin transactions as though they were earning revenue. Singapore released advice in 2022 advising issuers of digital payment tokens, DPT, to avoid publicizing their services. Republic of Korea. In South Korea, Bitcoin exchanges and other providers of virtual asset services must register with the Korea Financial Intelligence Unit, KFIU, a component of the Financial Service Commission, FSC. In 2021, South Korea banned all privacy coins from exchanges. In 2021, the country's legislature passed a new 20% tax on digital assets to go into effect in 2022, however the implementation date has been pushed back to 2025. The nation is working on the Digital Asset Basic Act, which might be enacted by the beginning of 2023. India. In terms of crypto legislation, India remains on the borderline, neither legalizing nor criminalizing its usage. A law prohibiting all private cryptocurrencies in India is in circulation, although it has not yet been voted on. There is a 30% tax on all cryptocurrency investments and a 1% tax deduction at source, TDS, on cryptocurrency transactions. Overall, India continues to sit between banning cryptocurrencies outright and regulating them. Existing restrictions are, at best, vague and offer investors little direction. The nation has been developing a digital version of the rupee, which might be introduced in the 2022 to 2023 fiscal year. European Community. Cryptocurrency is legal in the majority of the European Union (EU), however exchange administration varies between member states. Moreover, taxes inside the EU varies per nation, ranging from 0% to 50%. Recent years have seen the implementation of the EU's 5th and 6th anti-money laundering directives, 5 AMLD and 6 AMLD, which strengthen KYC/CFT duties and standard reporting requirements. In September 2020, the European Commission proposed the Markets in Crypto Assets Regulation, MiCA, a regulatory framework that enhances consumer safeguards, creates defined crypto industry behavior, and includes new licensing requirements. In 2022, it was enacted into law. If you made it to the end of this video and are interested in knowing more, let us know which part of the video you liked the most in the comments section below. We will appreciate your comment and work to make a video on your desired topic with an account shout out. Please like and subscribe to the channel and hit the bell button to be notified of our next video. Thanks for watching.